Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is CPI Live. This morning, we're going to go ahead and cover the latest the latest data set from the United States Bureau of Labor Statistics and our Consumer Price Index. This is an inflationary metric. We're going to need to know exactly where the state of inflation stands when we roll into the next Fed meeting, and this is going to be a big event. So I want to welcome everybody back. I think it's going to be an interesting day in the markets. Bob, good to see you. Hi, Coach. Bullish or bearish for CPI? I think that this number is going to come in hot. Let's just get right out to our expectations here. You can see what we're looking for in about T-minus 8 minutes. We're looking for about a 0.3% rise in CPI on a monthly basis, which is really what everybody's concerned about. How is the new year going with regards to pricing stability? We're not necessarily certain just yet. You're looking at core CPI potentially falling just a little bit, and then also the year-over-year core CPI is supposed to hold firm. I'm not too worried about core just yet. I want to see those raw CPI numbers. This is what we're looking at. We had really an incredible meteoric rise throughout 2025, and then we sort of plateaued out just a little bit there, and then we got a big bump towards the end of the year. And this delay in here was because the U.S. government shut down for business. So we're going to be watching this closely. I think that all in all, if we do get a hot read, which is sort of what I'm expecting, then you're probably in for more hawkish talk. And right now, we're not expecting any rate cuts anytime soon, specifically with regards to what we have working in the Iran war. A lot of breaking news out of the Iran war. We're going to cover that in just a second. Let's get right on out to the crude oil markets. You can see right here, U.S. oil sort of stagnant right around 85. I think that's an interesting support zone. It's really setting up to be the downside. I'd say probably the biggest barrier to seeing a major downside move is going to be 84.93 or 85. So to me, that is the game. Right now we're trading about $87, which is a big deal. Still bullish above that 85 level. Brent crude is right around that 86.16, somewhere in that zone. That's going to be pretty much the same type of level that we're looking at in that U.S. oil. 62% retracement on the daily. Those are huge levels. And we're catching bids now. And we thought that maybe the worst of this war was over. And you take a look at your live updates. This is what you got. Iran war brings new attacks on commercial ships. Dubai airport as Tehran warns banks are next. What to know as the U.S.-Israel's Iran war continues. There was an attack in the Strait of Hormuz. Not really a huge strike. You didn't sink an oil tanker out there, but the U.S. officials have told CBS News that Iran may be preparing to deploy naval mines and said they had destroyed 16 mine-laying boats near the strategic waterways. So what does all that mean? It means that the Strait of Hormuz is in play. That's bullish for WTI crude. No question about it. So let me see you. Tina Jean, good to see you. Tina, welcome. Let me see Marvel. It's a pleasure to be here today. Greetings. Good to see you, Marvel. Thank you for the comments on YouTube. We sure appreciate it. Mark, can you show us gold possible movements with potential data? Okay, let's get right out to the gold market. Seems that's what everybody wants these days is gold. That's cool with me. I mean, I think it's an incredibly difficult market to trade right now. Very tight month. We traded up above February's high. Thought we were going to run to those all-time highs, and we didn't get it. We got a big reversal instead, sort of a poke in the eye in a lot of ways. 5,000's huge, and right now we're at 51.90. And so when I pull the daily chart here, you're going to look at this and say, well, what the heck's going on? And I'm going to say absolutely nothing. 5,000 is the key level in this market. There's no question about it. We could draw some Fibonacci's. I believe we drew some in the switch markets or the switch on hot picks, and it looked something like this. So I'm looking at topside resistance somewhere right around 5,250. That's not a bad level to be targeting specifically on this data release if we get the big bullish break. But for right now, it's very slow, and slow markets are tough to trade. They're really tough to trade, especially when you have a news event coming out. So right now, gold is coiling up. It is going to move somewhere. Bullish or bearish, that's the trillion-dollar question. I get asked that probably every day 50 times. That's okay. There's nothing wrong with that. Up or down, I don't know. I don't think it goes either way. I think you probably get a head fake and then a reversal. So the way that we're going to trade gold here after this release is with our 9 EMA trading strategy. You can see right here we've got WTI really performed well over the past day or so. And right here we've got a gold 1-minute chart. So speaking of the devil, there it is. You're rocking this 1-minute sell, and it's working beautifully. Remember, if you're not familiar with the 9 EMA, I'll go ahead and plug the link into the live that chat there on YouTube. head on over to this page, enter your email, unlock the strategy pack. It's got the custom-made EA. I built it myself. Works like a charm. You got your custom-built EA that's going to plot the 9 EMA, the RSI, and then also it's going to give you your signals when you're looking to buy or sell the market. And there's a PDF inside of that strategy pack. Gives you all the details. There's 2 instructional videos on that page. Watch them. You'll get up and running with this thing in probably 10 minutes. I like this strategy. It's a pretty good one. As you can see, really a beautiful sell there. We just sort of missed it because I was rambling on about the Strait of Hormuz, which is okay. We're going to get more trades. Don't worry. This right here, 5-minute chart, WTI crude. Fascinating stuff. Really a nice bump there. This was beautiful. We caught that trade. You can see we've got our trade history. We caught that one yesterday during the live stream. Really just a great jam. And then right there, called the top of that thing. Pretty good one. And even this one really added a great accumulation trade. Nice move top. This one here would have been a pure loser. You're going to lose some after probably 4 winners in a row. You lost one, and then you caught another winner there. So this duration, keep it on the 5-minute chart. WTI right now for the 9 EMA. If you're trading the strategy, probably a pretty good pick to click market. Not a bad one. We're going to be looking at gold here on the 1-minute chart. We'll see if we can get a trade set up for us. We don't have much on the 5-minute just yet, but we will. We will after the CPI number drops. And then also, we're also looking at the Great Britain pound USD, which I do believe can get into overbought or oversold territory here and potentially give us a signal. So those are our 3 markets we're going to look at during the CPI release. We've got about 3 minutes. We'll get see if we can get an idea or two when it comes to actually executing a trade. I think we're going to be in pretty good shape. Let me see. I just downloaded the PDF. Thanks, Marvel. Check it out. Pretty good stuff. GAC, what are we looking at? We're looking at everything. Just hanging out on the Great Britain pound USD. Good day, sir. What about the CPI today? How will it affect the market? Well, I'm glad you asked because we have a few materials here put together. Essentially, what you're looking at is a very simple dynamic. If you get a low CPI, it's going to be bearish for the U.S. dollar. That suggests prices are coming down. If you get a high CPI, it's going to be bullish for the USD, which suggests that prices are going up. If prices are going up, you're going to have to you're going to have to raise interest rates or hold them firm and get rid of those rate cut ideas. If it's low, then potentially rate cuts are back in place sooner rather than later. They are not going to cut interest rates anytime soon. I've been yelling that from the rooftops since January 1st. Thus far, we've been proven correct. Andrea Garwell, good to see you, Andrea. Welcome. I'm confident everybody's having a great trading week. Let me see, Jan, you too. 1 million. All right. I don't know what that means, John, but if you just made £1 million, God bless you. Good for you. Let me see, Envy. Good to see you, Envy. Welcome. U.S. dollar Japanese direction, sir. All right, let's go ahead and do it. U.S. dollar Japanese yen. This is an interesting trade that we had develop. Or not quite develop, excuse me. We've got the Euro CAD. I'll go ahead and review these trade ideas just a little bit later because we got bigger fish to fry right now. So what do you have right here? Dollar yen, weekly chart. Definitely looking to the top side of this. If I was going into this CPI looking to trade the dollar yen, that would be my Fibonacci. If I got a retracement down there to 156.35-ish, that would be probably my late week scalp. I would love that. If we got an opportunity to do some business down there, I think we'd be in fantastic shape. But if we don't, we've got to make some adjustments here on the daily. Let's go ahead and let this news drop here, and then we'll see exactly what happens to this Japanese yen. Let's go 1-minute chart and see exactly what happens. Okay, the news should be out. We've got sort of a bearish move here for the yen. Interesting, and it's very choppy. Okay, right away I can see chop. We know that it's choppy. It's going to shake out as many players as it can. Now you're to the top side, real tight doji. Let me go ahead and get out to the news feed and see exactly what happened. Okay, here we go. March 11th, Consumer Price Index for February 2026. The CPI for all urban consumers increased 0.3% on a seasonally adjusted basis in February after rising 0.2% in January. The BLS reported over the last 12 months, all items increased, all items 2.4% before seasonal adjustment. Wow, that's just not very good. Basically, you got that raise that we were expecting. So this one's in line with expectations. In line with expectations. That's exactly what we're looking at right here. You can see the chop. I mean, this is absolute chop city when it comes to trying to trade currencies when you get a number that drops like this. So this is not the best situation for us to be trading. We're waiting for a bullish or bearish break. I have to be honest with you. We're 1 minute in, and I can already tell you I'm in rotational mode. We're going to look at this range set up over the next 5 to 10 to 15 to 30 minutes, and then we'll have a range really to trade the rest of the day, and I'll show you exactly what I mean. But right here, that's not a move. That's not a move at all. That's unfortunate. We're looking for more business. What's going on right now in gold? Nothing. Now, gold's coming off just a little bit. Let's get back out to our 9 EMA strategy. Do I have anything going on here? Great Britain pound, Japanese yen, Great Britain pound, US dollar, absolute chop city. Right now, we're waiting for a move in line with expectations. Just really a brutal number to try to trade. We're going to talk about how to do it as this sets up. But this just isn't, you're not going to get the moves you think you're going to get. Very, very choppy. You can see this is textbook on a 1 minute chart. Textbook price action. You burnt a lot of the retail traders that were short, and you burnt a lot of them that were long. That is a complete whipsaw formation, and it's certain death for intraday traders. I can tell you that my worst losses haven't been from fighting trends. They haven't been really from over leveraging or over trading. It has been from markets that don't move, whipsaw markets. And this right here is exactly what we're looking at. So unless we get a break here relatively soon, this is going to be an extremely challenging number to trade. I'm not impressed at all. I thought we were in for a little bit more fun, or else I wouldn't have got up so early. That's for sure. But in any case, you see gold rotating right in here. How about U.S. oil? U.S. oil's in rotation. Brent crude oil's in rotation. Let's get back to our dollar yen. Dollar yen this is really just a challenge. Let's go to maybe a 5 minute chart. Give us a little perspective. And I mean, that's just not good. Give me a 4 hour chart. Okay, potential trade here. Not really. I mean, you're bullish. I understand what you're saying here. NV, you're bullish and you want to get in, or bullish or bearish and you want to get in and trade it right now. It's just it's a no-fly zone. I hate to say that because we always typically execute some trades on these streams, especially after CPI. But what can we say? There's not a whole heck of a lot there. With regards to what could we be looking at here in the future, maybe a pullback, but I don't like that sequence really at all. Let's try a different strategy. Let's see if we can get something going. Euro USD, I'm going to go ahead and review this one in a second. We'll get back to this one. Dollar yen 920 crossover. We're really looking for that cross under, that 9 EMA to cross under about a day ago, and it didn't develop. I was sort of eager to take the short there, and now we're sort of off to the races. Let's take this down and say a 5 minute chart. Do you have anything at all? Okay, so you had a buy signal develop right here. The 9 crossed over the 20. You had an opportunity potentially to trade. There was a little bit of action right here. What would you be doing? I mean, maybe holding longs, maybe. I mean, I feel like this one's like in a Rubik's Cube. We're trying to crack the safe here. And the biggest thing that we have to remember is not to get too eager. If we get too eager when we shouldn't be trading the markets, we're going to get destroyed. So sometimes you just got to wait. I don't see much right now on the dollar yen. I really don't. Had some questions on the Great Britain pound, USD. More than happy to pull those up. You can see you just got absolute whipsaw, choppy trade with this 920 EMA crossover. This is another video we did over on How to Trade, the howtotrade.com YouTube channel. Check it out. It was a real popular video. People love the 920. I think this is going to be the next strategy that we put out over at Switch. I really like this one. This can get you into some great trades. It really can. Let's go 5 minute chart. 5 minute, I mean, there's your sell. But we're finally starting to extend. Okay, finally we're going to break a little bit. We're going to have some fun here or what? Okay, here's a 1 minute chart. So what do we want to do now? Well, I got a couple of options for our trades. Number one, we could get out our paper trader out. We don't need it. We could certainly try to sell with the pressure. I don't like this trade as much as I would if we were using a larger time frame. However, we do have a few price bars. Business is picking up, and you're starting to see the U.S. dollar rally just a bit. So I probably could be selling right around this 38% retracement, something like this. I don't think it's a bad trade. I really don't. I just don't really know if we get it. So let's go ahead and put a sell limit order right there. We'll go ahead and put our shade down and see what we can do here. So we're selling 134.20s. Where's my take profit going to be? We're going to be looking to be pretty tight. So let's go ahead and maybe shoot for something like this. You can see our per pip value just isn't that great. We should be putting more size on. Let's make a bigger trade here. Let's go twice that. Let's go 3 times that. 300,000 units. That's pretty good. Let's go ahead and sell limit right in here. I want to shade that area, that Fibonacci, just a little bit and throw our sell down and see what we can get done here. So what do I want? My take profit needs to be probably right down in here. We'll just shoot for a modest take profit, potentially down in this range, about $84, $90, somewhere in there. And then we'll manage our stop loss on the go. Essentially what that means is I'm going to watch price action and manage the trade live. We did something like this yesterday with crude oil. Turned out very well. This is a little bit different. This doesn't feel like a trend to me. It feels just like there's a little bit of pressure. I'm not too interested in this trade, to be honest with you, but it is some movement and we can trade it. So we'll try to execute that when it does go live. I'm on our trading dome. You can see right here, our spread is 2 pips. I mean, we're dealing with about a 2-pip spread, which I don't really particularly care for, but you see right there, we didn't get entered, and now the market's heading off a little bit. Let's go back out to our 9 EMA. This is probably going to give us our best chance to succeed here as we're trading this stuff live. Okay, gold's moving a little bit now, so we have an opportunity potentially to trade. Notice one thing that I do want to say. If we were into this sell market or into this sell signal right here, this would have stopped us out more than likely before the market goes in your favor. Always be aware of your economic calendar. Absolutely be aware of it. It's huge. It's hugely important. I can't stress that enough. That's why a lot of traders lose. You're holding a position and everything's going well, and then a CPI number drops, and then you're in big trouble. So we're watching this gold closely. I think we're going to get a trading opportunity. We're beneath 70 right there, or excuse me, beneath 30 on our RSI, and now we're looking to get our breakout above and close above that 9 EMA, and then potentially we can go ahead and shoot the moon on our long. So we're watching that closely. I think we have an opportunity there. WTI crude, which definitely is one of our picks to click. Not much going on there on the 5-minute, and that doesn't surprise me for this time of day. Very slow. Great Britain pound USD. Okay, now we're starting to get into a legitimate potentially a buying opportunity. We were in oversold territory there, so we're pretty much looking for the buyback. We just need a close here in the next, let's see, 3 bars above our 9 EMA, and then we'll go ahead and give it a shot. So we got alerts on that. When they go off, we're more than happy to get back over there. This would have been a nice trade. We just didn't get it. We just didn't get it. That's the bottom line. So we pull it, and we go back to the drawing board here if we're trying to scalp Fibonacci's. I know I'm bouncing around between about 3 different strategies, and been doing this a while, so we have a pretty good idea of how to execute each strategy with a little bit of competency. 5-minute chart, you can see what's developing here. I'm not interested in those Fibonacci's any longer. We've rotated down there just a little too long. This doesn't feel great, like it's going to give us any love here. We need to see some extension, maybe a bullish close, and we'll get a 9 EMA trade. We had a request for the US30 over there. Let's get over here and take a look at the US30 market. 4-hour chart is absolutely worthless to me for a US30. So not as worthless as a 3-hour chart, that's for sure. But what you have here is a 30-minute chart. Interesting moves. We're starting to sell off just a little bit. The US30 is all about the war. I mean, let's just cut it. Let's cut the BS. It's all about the war. We saw growth in CPI today, which suggests that maybe we're not going to get any rate cuts for longer than we think. But I would really throw today's numbers out. We expected it. It's in line with expectations. It's not a bad read. It's not a bad print. It's not like we saw this epic surprise. That's for sure. So to me, this number is sort of a nothing burger. As far as your US30 goes, you're going to have to step back to like your daily chart. You're going to say, okay, what's happening here? What is happening in this market? You've got a nice big sell-off. This is basically your wartime sell-off. We had a pretty good bounce the other day when we thought that, hey, maybe this thing's winding down. Okay, there's our signal. There's our alert. What did we get? Okay, there's our bid. Let's go ahead and buy the market. Half a lot, Great Britain pound USD. Probably should have bought more than that. Let's buy more than that. So what do we have right here? Well, we have an opportunity potentially to set a profit target right up in this area here. Stop loss down in here, right beneath that swing low. And then remember, we put on a double there. So let's just go ahead, put our profit target right up there. Well, whatever. Put a profit target right here. Something like that. And then maybe something like that for your stop loss. In any case, that's the trade. You've got your signal right here. Oversold territory was right there. Cross over that 9 EMA. And now we're just waiting for price action to do its thing. Realistically, we're just waiting patiently. And my position size isn't real great here, so we put on 2 halves instead of just 1 lot. Probably could easily trade 1 lot here. And we're just waiting for the market to rotate up. It was a pretty good trade. I like it in a lot of ways. I think we're going to get paid off there just because of the volatility, but you never know. Okay, so what else did we get here? We got an XAU USD. All right, send them. And that's what we want with a half lot. That's a more reasonable type of trade for gold. You're going to rotate that up. Now, there's a lot of different ways to set your profit targets. For me, I always love aligning my stop loss first. So beneath that swing low is exactly where you want your stop loss. And then right in here somewhere, I'm a big fan of one-to-ones. I would just be real conservative with it. Right now, the market's sort of blowing against us a little bit. To be expected after a CPI number that's this choppy. We should get some rotation back up into that range, that CPI range. But right this minute, I mean, the big thing is that we're getting hit. That's the bottom line. And it's not to be unexpected here. These are high-risk times to be trading. However, you do have a legitimate chance to manage your risk aggressively with the 9 EMA. And you can see we're probably going to get swept out of this gold. And also the Great Britain pound trades are going against us as well. 1 to 3% on any given trade. That's what we want. We don't want to get overextended. We don't want to make any huge moves. No rush to judgments with a 1-minute chart. But we're definitely losing. No two ways about it. The biggest thing to remember about systems trading is that you're going to go through ups and downs and ebbs and flows. I recommend back testing. I recommend trying to dial in a time frame that's ideal for what you want to do, and whether that's position trading, whether that's scalping. These are very low time frames, and we're looking for instant gratification. The fact that we didn't already get it sort of frustrates me, even though the market's coming back our way a little bit. We're not really doing very well on these. So we've got 2 trades. We've got one out on gold. We've got one out on the Great Britain pound USD. What do those both hinge on? They both hinge on the USD. If the USD rallies right now, our Great Britain pound USD trade sunk. Okay, if it rallies right now, our gold trade is sunk. And what I hate doing that because you're double exposed. I say pick your best market. Pick your best market and go for it. I've always been a fan of that. I get asked this probably every day. Shane, I'm trading 5 or 6 markets. What should I be trading? Well, what markets are you trading? Well, I'm trading the pound dollar. I'm trading the pound guppy. I'm trading the pound euro. I'm trading, and I go, whoa. That's 3 markets, and you're all dependent on the pound. Maybe step off of one. Maybe mix one in. Maybe go, euro US dollar. Maybe go Great Britain pound Japanese yen. Maybe go, dollar Swissy, something like that. At least mix it up a little bit. Right now, we are at the mercy of the U.S. dollar. If the dollar if the dollar rallies, we lose both trades. And I hate that. That's called double exposure. And when you're double exposed, it's really difficult to win. You're just gambling. In essence, what you need to be doing is diversifying your trades and having an opportunity to succeed with a strategy across multiple markets. So how do you do that? Well, maybe you trade a gold. Maybe you trade dollar yen. Maybe you trade gold. That's a couple of havens. Then you could mix in WTI crude oil. That's always a good one. Right now, it's very good. US30, we're mixing in US indices. US30, US 500, things like that. Have yourself a nice potpourri of markets that you want to trade. Now, one thing I really recommend, and I think is a very good idea, is just focus on 1 or 2 markets. Focus on 1 or 2 markets. Last month, February, I showed you my performance metrics. I showed them for 2 markets, WTI and the Euro FX. And honestly, the Euro FX didn't really contribute much. So I was basically taking crude oil trades. There's nothing wrong with being good at one market. You don't have to trade this giant litany of markets. I mean, Switch has thousands of markets available for you, literally thousands of Forex pairs and CFDs that you can trade. Anything you can think of, you could trade. Get good at like 2 of them. Get good at 1 of them. And then go from there. So right here you can see, in my view, at this point, probably just luck if we win. We didn't get that initial pressure that I was looking for, but still we have a nice area where we can stop ourselves out, 1 to 3% any given trade. And even if we get hit, it's not the end of the world. You got plenty of capital to manage those drawdowns and those top sides. So what did we do? We just got hit. Something just hit us. We got stopped out on one of those Great Britain pound trades, it looks like. Yeah, that one got hit, so we should be out of both of them. So those lose, and that's fine and dandy. Get on with your life. That's what I always say. So right here, gold's not out yet. Maybe we get a rally and a win out of gold, but the pound definitely turned against us. That's the way it is when your system's trading. WTI crude, do we have anything at all? Starting to rally here. Interesting stuff here on crude oil, that's for sure. Gold, though, still in the trade, just right around break even. We'll see exactly how that develops as the session wears on. Okay, let's get back to the US30 analytics. The big thing we have to really wonder about here with the US30 is, what is the war news going to do to price? And more than likely, it's going to shake it up. We've got headlines everywhere. We've got headlines, attacks Strait of Hormuz. Iran's threatened to hit banks, which is interesting. I've never really heard banks targeted. That's a new one, but it looks like that may happen. Big picture, what are we thinking about the war? I'm going to cover it in a minute. We're going to look at some of our poly market odds and try to get you lined up for the next couple of days. But this right here, US30, it's real simple. When crude oil goes up, stocks go down. So I'm watching crude oil out of the corner of my eye, and I say, okay, WTI crude's up about 5%. That's no bueno for the US30. That's no good for U.S. stocks. You're probably looking at a down day today, especially if crude oil continues to rally. That's what we're involved in. What do I want to do with the US30? Well, daily chart, you can see, okay, the war started. Hasn't been good. It's brought about a correction, even though there have been bidders in certain areas. As far as the sell goes, it's going to be a lot of sellers right underneath yesterday's low, I can tell you that. Probably looking to drive this price down a little bit. Do you want to be a buyer or a seller? I have to tell you, this is a really hard market to trade. I would be looking for value. So if I was going to sell the US30, something like this would have to be the ticket. Pullback sells 47.9. Okay. So if we rally about 400, 350 points today, more than that, 450 points, then you're probably looking for a late day sell or maybe a mid-morning sell, depending on where these things really open at. Somewhere right in that zone would be a pretty good sell. Now, on the flip side, where would I want to buy it? Man, I am in no hurry to buy it with this news cycle. I really am not. So like your monthly chart, you could do something like this, which, is going to give you that panic low from last April, and then you're going to get that nice, big, juicy rally, and then maybe a pullback to 45,179. We crushed our moving average yesterday in WTI crude. I really love my 13 EMA, and especially on a monthly chart, you've got to be excited to get that buy, I would say, if you do, in fact, get it. So like 45,950s or 75s, probably a pretty good area to get in there and do a little bit of work. As far as I'm concerned, 38% level, 45,179. It would be a beautiful trade. It would be a beautiful long. Are we going to get it? Well, I mean, you're still like 2,000 points above that. With our volatility, you would have to see a really big down day to even get us in the neighborhood of those. So I'm not really interested in even buying yet in the US30. What I would be looking at potentially is playing a breakout later today. I'm on that opening range breakout strategy. You could definitely line that up 2-bar orb. If you're familiar with the strategy, great. If not, head on over to the How to Trade YouTube channel. Check it out. That'll get you up and running with breakout trades for U.S. equities every day. A lot going on here, though. I just don't like it. I really don't. All right, here's your gold market, 51.76.5. What happened over here on our switch markets? We get stopped out finally? Yeah, we got stopped there. So we got whacked, twice on the 9 EMA. It doesn't surprise me at all, especially given this type of market structure and also a 1-minute chart. Everybody wants to trade 1-minute charts, and I just showed you how bad it can really be. You got to really watch yourself. This right here, you've got another buy signal here, potentially setting up on that Great Britain pound USD. If first we don't succeed, dust yourself off and try again. That's for sure, and that's what systems trading is all about. As far as what can we be looking at for later today, well, I just sort of gave you the breakdown on U.S. stocks. I think that could definitely be ugly. U.S. oil. Interesting stuff right here. Interesting stuff. We're sort of breaking to the bull. I would be watching that 91.50 area, probably going to test that. If we break above yesterday's high, which is right around 91.48, expect a breakout there. Honestly, if this market breaks above 91.48, you're going to see it run to 92, 92.50, 93, maybe 94. But that's all going to be based on news. You're going to have to see the big news event that drives the market, and that's going to be the Iran war. Bottom line is Strait of Hormuz, Iran war, 100%. 100%. Let me see. Sale. Let me see. Hey, buddy, what's good? Good to see you, Theo. Equity guide, NAS. Yeah, I'll go ahead and take that up on the NAS. Same basic thing, though. I mean, let's say we're looking at US 100 CFD right here. For me, it's a little bit different, but not really. This area right in here, I don't know what that is. That's gone. 25,000. 25,000. When we're looking at a situation where we cannot shake a level, I'm always thinking rotation, and that's exactly what we've seen. I mean, the NASDAQ, this US 100, this NASDAQ has been an absolute miserable nightmare. It's been a miserable nightmare, and you're chopping sideways, and you're sideways, and you're sideways, and you can't leave 25,000. And that's a real problem. That's a real problem for traders because you want to be long like these guys down here. They got long and made some money. People wanted to be short. Okay, made a little bit there, but man, the whipsaw action has absolutely killed swing traders. It's killed them because you cannot get rid of 25,000. It's a problem. It's a problem. So would I be interested in taking a buy? In this type of situation, a lot different than the US30. It's a lot different than the US30. We're hovering right around that 25,000, whereas US30 sort of rejected that 50,000. So if I'm looking at 25,000 here in the NASDAQ, right there, you've got a spike low, spike high. You know, I probably could get into buying a discount down there, 24.725, something like that. Now, that would be a pretty good move, and it's right there. We could definitely do that, especially if you break beneath yesterday's low. We're jamming up against that 13-day EMA at 24.875. That's a big deal as well. If we do push lower, which I think we probably will today, given our news cycle and the CPI read, I think you could definitely see a situation where we trend down and get a shot at that 38%. I'm in and I'm out, though. I'm not marrying this. I'm not trying to pick a direction because this market has no direction. It is rotating around 25,000, and that's about all there is to it. Until I see a major break and a major move, we've got to assume that we're going to be in a log jam here. Remember what happened on this day. All right, that's the 9th of March. That's Monday. So you had just the craziness that was the WTI crude oil market, drove prices at one point down to 23.9, 24, right? And then what happened? Well, you had a bunch of announcements that got you going to the top side. You had the G7 nations saying they were going to release their strategic oil reserves. You had Trump later in the day saying this war is going to be over very soon. It's pretty much finished. It's not finished. It isn't finished, and we're starting to get into deep water. I'll tell you exactly what I think about the conflict here. It's a war. I'm calling it a war. We're going to go ahead and cover that at the very end of the stream because I want to sort of set you up for where we're going. We'll finish covering CPI and a couple other markets, but this 38%, pretty juicy here. That's for sure. Theo doing well here. Let's see. Our trap didn't catch the bear. Nah, Marvel, we got beat twice there. Let's see. Say bad. Bitcoin, absolutely Bitcoin. Take a look at Bit. Bit, very similar to what we're looking at in the NASDAQ. 70,000 seems to be, it's not the point of control. I guess we could look at our time price offerings. I don't even think they have those, do they, for Bitcoin? 30-minute TPO chart. Okay, so if you're not familiar with this fun graphic, this is called the time price offering chart. I call it market profile. I was raised in the old days. I was always raised to call it market profile, with each one of these intervals being just a period in the day, 30-minute period. Point of control there, you'll see the way that these work. They sort of get staggered day by day. So you had a point of control there back from the 10th of March, and that POC is where we did a majority of the business. Very important that we understand what that is. Point of controls are very, very important. A lot of guys trade the previous point of control. A lot of guys trade the current point of control. I like to keep it pretty current. So you can see today's point of control here for Bitcoin is right around 69.5. So what's the point, Shane? Why mention any of this? Because I wanted to show you just how rotational this market is. We're right around 70. There's absolutely no way that we're shaking 70 unless somebody comes into the market and either crushes it or bids it. And I know that's Captain Obvious, but it's the truth. This market hasn't wanted to do anything in the longest time. So let's go ahead and back off to what I've been using is really my go-to levels. We've had trade ideas out forever. Now, I know we just went from a 30-minute chart to a yearly chart. I get it. But it's all about the levels, 57.8. We just got another signal on our 9 EMA. Let's see if we can get some love here. Potentially maybe get a trade. That's the one we want right there. Sell it. Okay, so that's WTI crude oil. We'll see exactly what happens with this trade. We've already lost a couple of trades on this. Very choppy. This is a 1-minute chart, WTI crude. Stop loss, we're going to put right up here. Profit target, we're going to put right down here. It may be a 1-to-1. And if we do get that nice rotation, we may be able to make a few bucks here on this WTI trade. I like it. 1-minute chart WTI right now is incredibly risky. You're going to get a rush of volume here in about 5 minutes with that traditional NYMEX pit open. It may help us. It may hurt us. I like a 5-minute chart. I like longer time frames on this, but I like to execute these trades for you guys live so you can see exactly how to set them up in real time and how they play out. Just the way it is. Highly volatile times. CPI, sort of a tough time to be trading. Let's see. We got another signal. We're getting signals everywhere. I want a 5-minute signal is what I want. Right there, Great Britain pound USD. All right, there it is. Another 1-minute signal, should we? All right, fire away. Let's go ahead and go for it. You can see right here your profit target needs to be up in here, and you're getting swept out of there again. Not really too big of a surprise trying to fight the trend here. It's not really a trend, but trying just to pick a bottom in this Great Britain pound USD. Not the best trading environment. The good news is the losses are small. The losses are small. I mean, if we're trading half lots, the losses are pretty small. So we can live with them, but you're going to get swept out of there again. Remember, you always have a couple of options with your stop losses. You can put it right beneath the signal bar. I don't like that, especially on a 1 minute. If we're going to take a shot at this thing, let's take a shot at it with a legitimate stop loss. And you can see this market's coming against us again. As far as what our WTI trade is doing a little bit better? It's flat. We're waiting for the open. These are both real marginal. We'll see if this goes down. I like this one a lot better than I like this one. Looks like we're going to lose a couple in a row, right? Well, that's systems trading, especially on a 1 minute chart. You can see how many trades a day we end up taking, though. An awful lot, that's for sure. Okay, in any case, back to Bitcoin. Yearly support down here right around 58,000. That's our bid. That's essentially the bid. And even though we're at 69, I still think we could go test that level again. I really do. I think that Bitcoin is in a precarious position because of the amount of energy that comes out of the UAE. Kevin, good to see you. Kevin, welcome. The UAE was going to be an AI hub, and an AI hub is in jeopardy right now. You're seeing data centers. Amazon had a data center hit in that neck of the woods. Natural gas facilities have been hit. That's a real issue for AI in general, and it's going to trickle down into your NASDAQ, and it's going to trickle down into your cryptocurrencies, at least in the short term. So for me, I'm not really bearish on Bitcoin. I'm not really bullish from here either. I saw a ton of venture capitalists on CNBC yesterday going on and on and on and on and on about how you need to be buying Bitcoin and getting long Bitcoin. And I go, I mean, maybe, but do we buy it from 69? I think we get a better price. I really do. I think we're going to get a better price before the big move topside. But this move is going to take a while. Bitcoin has been in a logjam. So if you're looking at this, 70 to the top seems to be pretty good resistance. We haven't been able to shake that level, but I would love a shot at 58 to bid down there. That's a trade idea that we've had out for a long time. A long time, that's for sure. Trader Kev, good to see you, Trader Kev. Welcome. CPI is already over. We'll cover it right now. Bad news, guys. Money. So let me see. How do you use the point of control, Marvel? I'll have to make a video on it or something. I've covered it in live streams. It's an old market profile concept. The point of control is oftentimes viewed as a rotational tool. So you can either use it if it lines up with some of your levels as support or resistance, or you could also use it as a range type of an indicator. I'll have to show you guys, do a video on it sometime or a workshop, because it is a little bit more involved. I would probably take me an hour to break down the concepts. Let me see, PACAMP. Where does Iran is only letting oil go to China past the Strait of Hormuz? Yeah, I mean, PACAMP, it's interesting. That was the big argument against Trump sending troops in there to secure the strait. People were like, well, half of that oil goes to China. So you're going to send U.S. troops and U.S. boats in there to facilitate the oil trade to China. That scared them off of it. That's for sure. Let me see. Moneycrafter, YouTube? Good to see you. Money. Honest question. I love those. Those are the best kind. Which variable would you look at first to determine if this is noise or structural change? Well, I mean, for me, the first variable with regards to the markets right now today is the news. We know that if we see the news drop and it's a bearish thing and we start to see volume flood into the markets and price action go down, we know it's already a structural change. You don't even need to look at the charts. You know it's going to happen. Crude oil spikes, you know stocks are going down. That's the first thing I would say, but that's only okay for right now, this week, as long as this war's going. That's it. Now, as far as what would be my first technical view, as far as the structural change, would be these Fibonacci's more than likely. I always say that my trend, it's very easy to spot trends using Fibonacci's. If we're above 38%, the prevailing trend is very strong. If we're above 62%, the prevailing trend is intact. And as soon as we're below 62%, clearly we're in rotation or a potential reversal. Now, a lot of traders want to get that information up here. They would call this a liquidity sweep and just ignore the time frame. But they would call this a liquidity sweep and, okay, the market's changed. And I always say not so fast, my friend, because a lot of times you see these moves and then you see rotation before we push higher. I use Fibonacci's for my market structure and fractal geometry. Hope that helps, money. But right now the markets are all about crude oil. No question about it. They're all about crude. Let me see. The point of control tool looks interesting. Well, it's colorful, right? It's fancy. It's colorful. Really need advance in my trading world. Well, I mean, just marvel. Pick a strategy and go ahead and just roll with it. See what you can do. A little bit of discipline, a little bit of knowledge and experience, and you can do really anything you want in the markets. You just have to be smarter than your average bear. And if you're here, it means you're on the right track. Let's have a look. All right, here it is. The United States Consumer Price Index of the United States increased to 326.79 in February from 325. And there's your chart. That is not good. It is as expected. Let's back this off and see if we can get a little bit of better visual here. It's as expected, but it just isn't good. Let's go to a 5-year chart. I mean, you can see what's happening here, everyone. This goes back to the COVID era right here. COVID craziness, unlimited quantitative easing. They haven't been able to even, I mean, we've gone through periods where you've slowed down inflation, but you haven't been able to stop it. And that's a real dire situation. That is a dire situation. And it's one that you're never going to put the rabbit back in the hat. In my view, COVID did a lot of things. You can see, really going back to 2017, life was pretty good here. Right around 2019, I remember interest rates were relatively low. You can see that the inflation was much, much lower. And then what happens? They pump the system full of unlimited funds to stave off a depression or an economic meltdown due to the COVID-19 pandemic. And look what happened since then. You talk about new norms. They can't slow it down. I don't think you have to subscribe to show the long-term view of this, but you'll see that if you ever look at an inflation chart or a CPI chart that goes back, 50 years, you'll see that inflation doesn't really tick higher until we start getting into the 1980s, the mid 70s, early 70s. And why did it tick higher? Oil strife. All right, let's go ahead and get back out to our 9 EMA. We might as well show some decent ones. This trade here is going pretty well. You can see that this Great Britain pound USD, you had a nice rotation on the top side. Didn't quite hit your profit target. That really makes it difficult to trade effectively. Maybe that's a more accurate type of a trade idea, but you've got one going positive, which is fantastic. I don't know how our WTI turned out. More than likely we got paid off there. There was your 1-minute chart. You came right in. I don't like that because you can see the volume, and this is just tick volume here, but the volumes really pick up right around about 9 a.m. Eastern every day in WTI crude. That's a traditional NYMEX pit open, and for whatever reason, the market still gets hot right then. So if you're looking at WTI, a bit of a sell-off. That was a pretty good trade. So, what do we say about this stuff? What do we say about systems trading? It's not for everyone. That's for sure. It's not for everyone, but you can see that it does ebb and flow, and that's certainly can be a really big deal if you're interested in maybe making money over the long haul. It's all about your execution and your risk versus reward. There's no question about it. All right, so here's our poly market odds, and the reason why we're going to look at these is to see exactly where we're at with this Iran conflict, Iran war. Will the Iran close the Strait of Hormuz by March 31st? 100% chances. So right now, it looks like that's going to happen if it hasn't already happened. As far as U.S.-Iran ceasefire, 30% by March 31st. Take a look at this. That's down 37%. So all of a sudden, we thought that this thing was pretty much toast. Trump was out there Monday trying to reassure the markets that the war was going to be over very soon. Now, I know it's only a few days. The United States government gave themselves 4 to 5 weeks as a potential timeline to get this thing wrapped up. Really hard to say. I think this is a whole new ball game right now. I really do. Let's go through a couple of these other odds. Will the Iran regime fall by March 31st? 5% chance. Unbelievable. Look at where we were. 37% chance. April 30th, does it fall by April 30th? Does it fall by June 30th? Does it fall by 31st of December? It looks like there will be no regime change right now. At least that's the common, what people are thinking. These odds, I know they're not the end-all be-all, but this poly-market stuff, and there's a bunch of these things. Kalshi's another one. These markets have been incredibly accurate. They've been very, very accurate. The last several elections, big geopolitical events, economic events, they've been accurate. So when I look at these odds, I look at it as a sort of a barometer of public sentiment in a way that we can sort of gauge expectations with regards to what we think is going to happen. So it's sort of one of those things where I look at this stuff and I go, gosh, that's not necessarily the best way forward. It looks like this thing is going to drag on. U.S. forces enter Iran. This was the other big market driver that I had, was boots on the ground. That'll mark a major escalation. 9% say by March 14th. That would be this week. 34% by the end of the month, and 58%. Still a 60% chance that you see U.S. forces enter Iran. That could be special forces or conventional forces, whatever. But that is a big one. That's a real big one. So I'm fascinated by what's happening with just the public perception of this war. That's for sure. It's hard. It's really hard to get in there and start talking about what's going to happen in an active theater, in an active combat theater. I don't know. No one does. What I would say is we saw crude oil sell off, and now crude oil's rallying. That tells me that this thing's not over yet. Are we going to see more weakness in our stock markets? Maybe. Right now, the future's not really down very much. The risk assets are in a holding pattern. We saw that with crypto. They're in a holding pattern. You're seeing that with stocks. Huge volatility followed by a long period of consolidation. That's what we're seeing. So when I look at something like crude oil and I see that it's running basically the show, how do we trade it right now? Well, we've got our levels. We got our news. And if you're going to be an oil trader right now, you need to be watching the news. So we put out all the levels for WTI and Brent. I think that these are going to be interesting. This 62% level that we're trading at right now, this long-term level, right at 85. I mean, do you step up and take an 85 bid right now? It's probably a pretty good bid to get a little scalp, little 10, 15 pip scalp. Sure, why not? The big picture, though, is we're waiting for the other shoe to drop. At what point is the announcement made that the United States has declared victory and that they're going to wind down combat operations? I don't think this thing goes another week. I think that's your eventual outcome. So if I had to make a prediction right now, I think you're going to wind down military operations by next Friday, not this Friday. I think that the United States is going to declare it an operational success, meaning they destroyed a lot of military assets for Iran and got the job done in their view. I don't think you're going to see a regime change there. I think the regime's going to stay in power, and I think that essentially will stop the shooting for right now. Now, there's X factors everywhere. We're talking terror attacks. Supposedly, Iranian terror cells have been activated all over the Western world. Maybe, maybe not. We got to wait and see. If we see a large-scale terror attack or a big terror attack, and it's something that we have to consider, that'll drive the markets absolutely haywire. If you see something like a 9/11, or if you see a major attack where it's not just an isolated shooting, we've seen those. But there was an isolated shooting in Texas here in the United States. There was also a couple of kids trying to throw bombs, improvised explosive devices in New York City. There was other bombs found. None of it's really been on a large scale. I'm talking about something that's a larger scale. I'm talking about a mass casualty event. I'm talking about a government structure, something of that nature. If that does happen and it galvanizes sort of the public, then you will see probably a ground invasion and a large-scale escalation of this war. That it looks to me like it's that simple. I think right now the United States is getting ready to walk away. I don't know that for sure. I'm just talking. I don't have any contacts at the Pentagon. I'm just talking. But judging by the odds we saw right there in poly market, judging by what we're seeing in price action, it feels to me like the markets are waiting for that other shoe to drop. That's all there is to it. We're waiting for the next big news event, whether that's a withdrawal by the United States, a declaration of victory and a withdrawal. You're not going to get an unconditional surrender out of Iran. That's not going to happen. Not the last unconditional surrenders were in World War II. You're not going to get that. You may get them back at the deal. They may want to cut a deal or at least have a deal out there to say so everybody could save face and end the shooting. That's possible. I believe a ceasefire is possible on the back of a tentative deal, but that'll only be temporary. And terror attacks. Those are your big market drivers with this war moving forward. That's the situation we're in. So if you're trading, be ready for those. Be ready for those headlines because that's really what can roil markets. Okay, let's see. Tina Shane, good to see you, Tina. Hi, Shane. Why the CPI figure is back? The Euro USD still falling at the news release. Yeah, I mean, essentially what this guaranteed, this CPI ticking higher, and we'll just sort of go over it real quick, Tina, is your Fed Watch. See me Fed Watch. Next Wednesday, I'll have all the action for you live on FOMC Live. But what we've got there, 7 days, 4 hours, 48 minutes. What can happen here? We're looking at a 99.3% chance that interest rates stay unchanged at 3.5 to 3.75%. Now, we knew that. How about April? 89.1% chance that we stay firm. How about June? This is the big one. 63% chance that interest rates are held firm in June. That's big because that June meeting will be the first of the new Fed chairman. We're expecting a 0.5 point rate cut. I'm expecting a 1/4 point, 0.5 point. And because this CPI is up a little bit higher and you have the high oil prices and a war going on, they're in no hurry really to cut interest rates right now. This is a really interesting thing that's happening. So to answer your question, why is the CPI figure, the Euro USD is falling? Well, the Euro USD is going to fall because the dollar is stronger. Your DXY is up 1/4. Dollar index is up 1/4%, so it's showing strength against the majors. And when we look at our Euro USD, yeah, see, what do we have, a 920 crossover buy there? Yeah, this one's getting whacked. You see, we're coming off big because that dollar is gaining ground. How would we trade it? Let's go back over to our 920. This was actually a trade update that I wanted to give a little bit earlier, but we just sort of got out in the weeds. So what's happening here? This was an idea that we had out there in our weekly brief. You can see there was your crossover bid, possible buy. I was thinking, yeah, the U.S. dollar, is that strength gone? Sort of betting that the war was going to be over or winding down. Took the bid right there at 38% on a pullback off of this signal, and now we're rotating down lower. So I think that you're onto something here. The U.S. dollar's flexing because they don't believe the war's over yet. The markets are starting to say, this thing isn't over yet. And then also you've got a situation where your interest rate cuts probably, I mean, just back to our discussion here on the CME Fed Watch, they're probably not coming until when? Probably July. And even that's a 50-50. So are you going to get any rate cuts this year? September. All right. We're only pricing that really the odds of the first rate cut coming in September? That's really something, isn't it? Really something. All right, everybody, I've gone on long enough. I sure want to appreciate you joining me today. Decent trading. What were we, 2-2? We had a WTI winner, a pound winner, and then a pound loser, and a gold loser on that 9 EMA. That's pretty much how it goes. Remember, the smaller the time frame, the choppier the price action. So you're going to want to make sure that you're sort of looking at time frames that are legitimate. I love a 4-hour chart, especially if those ranges are smaller. 4-hour chart can really help you on that. But also, even a 5-minute when things are very volatile can give you a little bit more room to work. 30 minutes, not bad either. So that's sort of up to you what time frame you choose. 1 minute, believe me, is the most volatile and touchy of them all. That's for sure. Unless you're getting down into the tick charts and 30-second charts. All right, everybody, I'm going to go ahead and sign off for now. Just remember our talking points, or excuse me, our news items are absolutely imperative that you understand the ones to watch for. You're watching for terror attacks. You're watching for attacks on the Strait of Hormuz. You're watching for U.S. boots on the ground. You're watching for a surprise declaration of victory and a drawdown of U.S. assets. Those are the market drivers right now for the war. And we'll just see how it pans out. I have no idea. Those guys that are betting on Polymarket, I don't know. You know, they're just making decisions based on the news and intel. But as far as I'm concerned, the way that I see it right now, I genuinely don't know which way this thing goes. It feels to me like Iran is holding on and they're not going anywhere. You're not going to see a surrender. I would be shocked if you see a surrender. And it feels like they've got enough munitions, enough of these missiles and drones to go for at least a few more weeks. That's an interesting situation for our markets. It really is. All right, everybody, I've said enough. You guys have a fantastic trading session. We'll be back tomorrow. We're trading the Forex, commodity, and stock markets, recession fears. Actually got a switch markets webinar planned for tomorrow. So we're going to go ahead and go with that. And that's going to show you exactly how to trade volatile markets. That's going to be a key thing that probably should have done it on Monday, but we're going to do it on Thursday. I'll give you a few tips. I'll give you 4 or 5 tips on how to address volatility, manage your risk, and trade it in the live market. All right, everybody, that's a wrap. You have a fantastic trading day. If you need anything, I'll be over at howtotrade.com. Go ahead, sign up. It's free. Send me a private message, and I'll be sure to answer it if you have any questions. Also, I'm on X at ShaneV_trader. You can check that out probably for updates throughout the day when we see a key news event or something that needs to be reported on. All right, everybody, that's a wrap. Have a great trading day. As always, trade the action well, and we'll talk soon. See you.